For more on where the market stands and perhaps what to expect, let's now bring in the strategist at Path Trading Partners, Bob Iaccino. Bob, good to see you. Thanks for joining us, and happy New Year.
See you.
Let's get your
Same to you.
Thank you. Let's get your take on these markets right now. A little bit of a wait and see, but we had a huge move on Friday. What are you hearing and sensing in the markets today?
Well, first of all, and I'm sure a lot of people on your show have said this, Catherine, is there's a lot of optimism for this particular round of trade talks. Not necessarily that there's going to be some sort of concrete deal, but we've seen positive rhetoric push the market higher before. We got a little bit of a bid after the dinner that gave us the 90-day ceasefire that we're theoretically currently under now, although there has been a couple of little insignificant trade moves here and there during this ceasefire between the U.S. and China. So I think the optimism is probably well-founded. Again, I don't know that we're going to get a deal, but there's a lot of high-level officials involved in these talks. It would surprise me if the recently announced primetime address covering the border wall that you mentioned in your last report, the steel, the wall, the brick, I don't know what it's going to be, but the address that's covering that, it would surprise me if President Trump didn't say something like talks are going well. I think there's an effort to get this thing resolved, or desire to get this thing resolved, given the action in the markets. President Trump is a slave to these markets. They have not treated him well over the last few weeks. I think we may see some sort of a resolution, even if it's just rhetoric.
It's almost as though Apple was the real wake-up calls. There's so many times when I talk to people about the Chinese economy and how the U.S. companies are actually faring overseas, and most people are always that everything is fine, and it's very small in terms of the total percentage of one's revenue and or profits. But take a look at what Apple did in terms of pre-announcing the first time in 17 years. Does that say it all?
Well, that was interesting to me. I think Mr. Cook kind of took advantage of the situation in a way, because I think Apple has bigger problems, macro problems. I'm not the only one to have said this. And when you look at actual tariffs, according to Wilbur Ross, there hasn't been anything that would directly affect Apple yet. Now, in fairness to Tim Cook, in the last earnings season, we had 105 companies report guidance. And I mentioned this to you last time I was on with you. 68% of them reported lowered guidance. So it's not just Apple. Apple was just sort of the celebrity company that announced it, that guided lower. They did it kind of alone. So I think it had a big effect on the market. But overall, that Apple hangover seems to have kind of gone away everywhere but Apple. We actually dipped our toe in the water in terms of recommending to our clients what to do. The night before the Apple announcement, we said we're going to buy tomorrow's open for a number of different stocks. Very small, but not our normal allocation, but a few stocks kind of dipping our toe in the water. And we took that hit during that day and wrote it back, and we've been paid for that.
Okay, Bob, we have to leave it there. Oh, Bob, you know what? Our window has been extended. Thank you. So when
Wonderful.
Yes, exactly. So it sounds then as though you think that Apple's really a bit of a company-specific situation, or do you think that we will, in fact, continue to see some pre-announcements from some of the big multinational companies in the United States?
Well, it depends. Like I said, I think a bunch of them pre-announced in the last earnings season. In terms of the actual pre-announcement that you're referencing, I think they'll wait. I really do. If we don't get any sort of resolution in these trade talks, then yes, I think you'll see it. Companies tend to like to take the hit early and then beat on earnings.
Okay. So what's your view then right now in terms of how tactical versus strategic, perhaps long-term thinking you want to be in the marketplace?
Well, I think things are on if you're long-term. Now, our specific mandate is not necessarily long-term. We're 3 to 6 months in terms of our position in equities. But if you're long-term, yes, this is a tremendous opportunity. So the bears were right last year. They're right 6 out of every 30 years, right? So the overall odds, if you're long-term, these are, yeah, they are. I mean, 6 out of every 30 years. You look at the S&P 500 as itself, if you include dividends, returns about 8 to 9% a year, and then every 10 years has a 50 to 60% drawdown. I mean, if you're an investor, if you're a fund of funds, which I was, that's an investment. If you showed me that, I'd put it aside. I wouldn't invest in that. Having said that, most people don't have the time to actively invest. That's where you can't be buy and hold. But if you have the time to actively invest like we do, it's not necessarily the time to step on the gas, but it is time to put your kind of dip your toe in the water and buy companies you've been looking at that have been overpriced over the last 2 or 3 years.
Any sectors or names that you can give us?
Well, WYNN is one that we bought on that particular day. It was the third, right? So on the second, prior to the Apple news, we put out a couple of companies. WYNN was one of them.
I think that
we
was
said
one
we want to buy this on the open.
Wasn't WYNN
Yes.
one of the worst performing stocks in 2018?
Absolutely.
WYNN, right at
Horrible.
the bottom.
Horrible because of the lawsuits and the sexual harassment claims and Steve Wynn stepping down. But since then, it's performed very, very well. And if you look at specifically the Macau earnings, it had the best of the three major Macau casinos. If you include Las Vegas, Sands, et cetera, it had the best numbers. So once we get past these allegations, which they've been delayed, so the stock has really returned the stock has moved, shouldn't say returned, 5.7% since we got in it on Thursday. It's a better performer minus the lawsuits.
So are you bottom fishing then in terms of the underperformers? I was sent a list the other day in terms of the worst performing stocks, and I thought, maybe I need to be taking a look at these, because sometimes, you might believe in reversion to the mean, and everybody does, and that's just one reason why the stock's going to go up, plain and simple.
This is not in reference to you, but I hate that phrase of bottom fishing, because bottom fishing, you're generally getting carp, catfish, and all the stuff you don't want, right? We're looking for value. We're looking for companies that we think can sustain profitability and have been beat up. I guess that's bottom fishing, so yes, we are.
Okay, and away from WYNN, what else looks interesting, either stocks or sectors?
Well, I can tell you I don't like energy right now. Even though I'm a crude oil bull, I'd rather buy crude oil futures. I don't like the energy sector because I think the bullish move in crude oil is probably a 6 to 9 month phenomenon. And the oil companies are just really bad at taking advantage of those things short term. Unless you get a 2 or a 3 year rally in crude oil, energy sector probably won't respond as well as the futures will. So we're going to be long crude oil futures, not the sector.
Why do you think that that we won't see an uptick in the sector?
Well, really, I'm talking generally U.S. companies. So they tend to do a bad job of taking advantage of the fast price spikes, because you're talking about a speedboat in the futures versus an ocean liner in the companies. They just can't adjust. They might make 8 to 9% on some shale acquisitions that they've recently done or are looking at, but that'll be in the face of a crude oil rally of about 20 to 30%. So if Saudi Arabia gets their wish anyway of $80 crude oil, which came out in the Wall Street Journal article. So it's just more of a situation where I'd rather put money to work in the actual futures contract. I'll put money to work in the stock market elsewhere.
Okay, got it. Bob, good to catch up with you today. Thank you very much.
Good to be here, Catherine.
Thank you. That's Bob Iaccino. He's the Chief Market Strategist at Path Trading Partners.